Hello and welcome to the closing beat, everybody. Happy Tuesday to you. How you doing out there? All is good. Welcome. We are financial advisors here at Jazz Wealth. A little behind today, right? Making my way. There's the water. Did you notice, by the way? Look, is it here on this side? See my dot? That's not from softball. That's from squishing that guy. I was leaning on the dog, and the dog was like, "Arr!" Not having it. He got me. Finally. Anyways, I hope you're having a good day out there. Thanks for joining us here. We are financial advisors for people that don't think they can have financial advisors. And I'm still playing catch up. Charlie's been gone. I'm just trying to keep caught up with everything. But we should have an update on him here today. Going by to visit him there. Our Wine of Wealth this week will be with Eric, of course, to hang out with you. If you don't know Eric, he's got videos on our channel as well. And check us out, jazzwealth.com. All right. Let's take a look. Shall we? Let's go over to the charts. We got a lot to cover today. So we have the S&P with basically just a 2-day back and forth, right? A little bit down yesterday, a little bit up today, right? We're not really accomplishing anything. And that's fine. I'm not saying there's something wrong. We had a great Thursday, quiet Friday. We talked about that yesterday. And then now it's like, okay, hold on a second. We need a catalyst, right? There's a lot of economic news coming out this week. So the investors that are in the know, that like paying attention to all this stuff, there's no reason for them to buy right now. Let the data come out, right? Let's see how we got GDP numbers coming out tomorrow, or the second revision, if you really want to get geeky with it. But so that's what's going on. And there's no reason to just dive in and get everything going. The S&P is now up about 7% year to date. That's okay. That's fine. It's adding to last year, 24% gains last year. So it'd be perfectly normal for things to just go, oh, wait a minute. Let me hold up and see here. So far, that hasn't happened. You guys keep wanting to keep spending money on everything there. So it's fine. We've had little resistance here so far in the S&P. All is good there. If we look over at the well, actually, I'm going to jump down to the Russell. Russell holding on to a slight gain year to date. Got a little bit better today. It's up 1.64% year to date. Remember that last year it was up 15%, and it was kind of, it was the laggard last year, and it's so far the laggard this year. It's in fourth place, right? So you got the Nasdaq, S&P, the Dow, and the Russell. Small caps right there, right? Small cap valuations are becoming more attractive. They're also becoming more, that's Haley's channel, if you want to check it out. So they're also becoming more attractive because we see large caps and some mid caps not as attractive, right? If you're a fundamental investor there. So as long as large caps keep providing, small caps are having a hard time getting going. But you notice what's happened. We've been talking about this. It's not the most glamorous thing. I get it, right? Small caps have been waking up ever so slightly. I don't think this is the ultimate blast off from here. But you notice that people are saying, I had my large cap growth. For example, today, large cap growth was flat, 0.1% gains on the day. Small cap growth, 1.7%. What happened yesterday? Remember I brought that up I don't know, guys, a little bit of a hint there. There may be something going on. Look at the continuation today. So it's just the first little sign of us going, oh, money's moving a little bit. Large caps getting a little bit overvalued, overpriced as well. And people saying, let me come on down to this here. So do we look at that small cap growth area? From a fundamental standpoint, yes, it's attractive. You're going to see all the analysts, and they already are, starting to talk about how attractive some of this is. I want to give you guys a little bit more of an insight into where to look, though. People love the small caps because they're smaller companies. They're more nimble. They can adjust quicker to tightening margins, rising inflation, or what we would call sticky inflation. They can adjust to higher interest costs. You know what I mean? A little bit faster there. Now, let's pretend that inflation remains here, right? Has a hard time getting under 2%, the goal of the Fed there. So what would you look for? If you say, Dustin, I don't really know small cap stocks. I know the big names, right? That's all I see. Apple, yeah, I get it. I know what they do, but I don't know small cap stocks. Where would you do? You're going to look at small cap stocks that have wider margins, right? Because the margins of small cap stocks tend to be a little bit more volatile. They do need to adjust. They don't have that availability that the large caps do in terms of access to capital there, right? Now, consumer-related small caps, they'd be out. Wouldn't look at that. Tighter margins. So that gives you an example, right? A retailer, a food distributor, a restaurant, right? Margins are too tight. We don't want to be involved with things like that. Small cap with that's focused on software, maybe semiconductor sales to larger companies there. Enterprise type sales, right? Where that's their focus, is like they're feeding up the what do you call it? Feeding up the food chain, so to speak. Another place you could look is infrastructure names. Why? Infrastructure names largely benefit from new laws, new congressional spending. The government taking our tax money and spending it there. So when you look at small caps, valuation is not the only thing, but I just want to kind of point out that, each day I give you a little bit more, so we're like, okay, now I kind of get what to do instead of just doing it all in one shot and scaring the devil out of you, because I've been known to do that. All right, looking at the Nasdaq there, we got a nice little same sort of performance. Large caps, remember, they were quiet here today. Large cap growth only 0.1%. The index, S&P, Nasdaq, whatever, very small gain. Value stocks only 0.3% gain there. Compare that to everything in the small cap area. That's where all the action was today, just as an FYI. If we look at the Dow, same thing, just a little bit weaker here today. Slight pullback, not a big deal. Everybody was focused on Bitcoin because, you better get yourself some of that, right? I mean, God, look at that. Great straight little rocket ship there. 57,000. So that was the big headline if you're focused on that sort of thing. I do not tend to focus on that, just as a heads up. Oil. There's that coiling up energy. And I'm sorry for the green lines. I got to get rid of those. Oil coiling up here in the last week and a half to 2 weeks, right? And so that's where the ceiling is, right? We got this obvious area where it's had trouble before. Technical traders will call that resistance. We've got overhead resistance at 79 roughly, right? Anything over that, watch what happens. You get this sort of breathing room for oil to just take off a little bit. So I still point that out. I'm not a big fan of this type of movement in oil, but that's clearly what's happening there. Gold pretty much quiet here today. Not really anything to talk about there. And then if we look at bonds real quick, you got prices higher in bonds, interest rates down. So if you want lower interest rates, you want to see every day when we talk about this, the price is moving up. That would mean interest rates are going down. Right now, bonds are rather cheap relative to its kind of history there. All right, we mentioned Congress here a second ago. I want to talk about this one real quick. Politics and your portfolio have no place together, right? They don't mix. They're eggs, or they're oil and water, right? So the reason I tell you that is because what's next week? Next week is the Super Tuesday thing coming up? Yeah, next Tuesday, I believe it is. It wasn't yesterday, so it's got to be. Okay. I just want you to think about this real quick. If President Biden gets reelected, will that mean more to the market than what AI has done to lift the large caps? Will it mean more than the potential for rate cuts, which could stimulate things a little bit? Will it mean more than the economic growth, which we might find out a little bit more tomorrow? Will it mean more than earnings, which we just went through earnings season? Will it mean more than the current wars that are going on, for lack of a better word? No, it will have no impact. Now, on the days of the election, there can be volatility along there, but remember, the S&P slightly underperforms itself during election years. Whereas everybody gets in your little emotional little bucket there and you go, oh, this guy, this girl, maybe Nikki Haley's still doing her thing. So just remember, it doesn't mix with your portfolio. It often tends to cause you to lose out. We don't want that there. If Trump gets reelected, presumably he's the front runner at the moment and it's a rematch, as everybody's saying there. Will it mean more than AI? Will it mean more than rate cuts, the tariffs that he's so big on there? Will it mean more than the economy growing? No, none of that. The market doesn't care about that. Who the president is usually doesn't matter, right? The stock market, by the way, if you're curious, the stock market likes to see no change. It really doesn't care who the president is, right? You can make an argument that Democrats are better than Republicans, and that's because of where you could even dig further and go, well, that's because where the market started when a Democrat took over. Oh, okay, we got a rebound happening there. I don't care, right? It doesn't matter to me. It's never mattered in any election, and it's not going to matter this time, right? So before you get all emotional, remember, my big thing is if I tell you now before things happen, I've got your attention. If I wait until, whoever says something, oh, Trump said something, Biden did this or that, or if I wait for that, it's too late. You're emotional. You're all freaked out, and there's nothing you can do to stop it, right? So I like to point those things out as we go. Also, hey, should we just take a look? Let's have a look and see who is leading the way in the old Guess the Dow.
Yeah, fresh. Oh, there you go. Yeah, fresh leaderboard there. You got Janica, Hannah, Aaron, Carolyn, and Linda. No relation to Janica and Hannah, but those are your leaders for today.
I see. And do you get emotional around the political season there, do you, Cody?
Do I get? No.
You didn't know?
No.
You don't get fired up by anything?
Not emotional, no.
No, he's good.
No, no. I mean, yes, I get triggered. Yeah, the ads get me.
The ads get you?
Yeah.
You know who gets kind of into it, surprisingly? I'm going to pick on him a little bit because he's not here. Charlie.
Oh, yes.
Charlie is not an independent.
Tea Party or libertarian.
Nope. Libertarian. Charlie considers himself a libertarian and very just analytical with his thoughts. I like to get
an RFK guy. Is there?
He might be. We'll see. I don't know. But I like to get him fired up because I like to get all you guys fired up with this political stuff because who cares? I mean, I know you should care. I'm not saying it that way, but my gosh, I'm just so looking forward to this, All right, hey, let's do some stocks in the news with you. You ready? I got some good ones here today. All right, Lowe's. So Lowe's hits new highs. We happen to own it, so obviously happy to see that. Earnings better than expected. Guidance was a little bit weak, but check this out. The key, this is what I love about retailers, right? It's so easy to understand the fundamentals of retailers. So if you want to get into this and you're like, I don't know, I want to learn like the details of a company, start with a retail company. It's pretty straightforward, right? They have things, they cost them a certain amount of money, they try to sell those things, and preferably a lot of them for as much as they can. So anyways, sales for Lowe's were actually down, right? And that was expected. They were down 6.2%. We were expecting about 7.2% decline in sales. So that's better than expected. Yay. Okay, that's good news, right? Doesn't sound good, but it is. They had less sales, but the profit that they made on the less sales was greater, just by a little bit, 0.2% to be exactly there. So that's a good thing. We can have lower sales and make more money. It's like the dream for most companies, right? Management, when we looked at their conference call there, I thought it was fun that they said the DIYer has slowed down. Y'all aren't painting your houses anymore, like buying some tiles and light bulbs and, I'm Mr. Fix-It, you know what I mean? I guess not. So that's what you got going on with Lowe's. That puts it at new highs, at least temporarily there. Macy's picked up as well. Beats on earnings by, about 25%, really. It was a great beat for them. They are spending $1 billion, which they put in this as a charge on this earnings here, for restructuring, improvement, things like that. They're going to close 150 stores, and they're going to expand into the Bloomingdale's, right? So they have, that's theirs. So they're going to expand into that. Why? Their sales, same thing. They're like, yeah, sales are kind of steady. But if we can sell the same amount of luxury stuff, or just include that, like take away 150 Macy's stores and focus on Bloomingdale's, higher margins, right? These guys aren't dumb. They've got to figure it out there. Margin. And by the way, you guys will pay for it. At the moment, you can look through not any of them, but most of the retailers, the big names, and you can actually see people are paying for it there. About that. AutoZone, I just thought I put this on here because it made new highs. I thought it was an interesting move today. But also, if you look at their earnings, international sales up 24%. Okay, that's a big jump. But 24% more than expected, I should say. Not 24%. 24% more than expected. But here's the cool part. Same with them. See the theme? See how I try to teach you something while we're talking? Margins were 6% higher than expected. Huh. So these guys are winning the game. And don't you know, look, the best performing stock was able to say sales were up and margins were up. What a difference. We go back to Lowe's for a second. They're like, sales were down a little bit. We expected it, but our margins were just a bit higher. Oh, no, you didn't get to do both of them, right? We go over to AutoZone. Sales were up and margins were up. You get rewarded for that. So hence the good move there. See how you can, I'm oversimplifying, of course, but you see what I'm saying. Not good. Here you go. Here's one to kind of show the other side of things so everything doesn't look all, rosy. So they beat on earnings. Everything's fine there. It's an interesting moment for them. With Smuckers, they raised prices. We talked about this last earnings quarter. They raised prices, and they found that people were paying the higher price. Great. At the same time, their margins went from 39% to 32%. Sales were fine. Right? We're selling the same amount of stuff. We were even able to raise the price, but we raised the price because our prices were going up, and our prices went up so much that we didn't raise the prices enough. Oh no, we didn't make as big a profit as we thought. How do you think the stock responds, right? So it's all, it's all related there, just like pointing those things out. Okay, you want to do a fun one? I gotta do it. Yesterday, we talked about the Democrats just smoking the market, right? And I shared this with you here. And it's only fair. Let's talk about Republicans as well. I'm not picking on one side or the other. This was the performance of the Democrats' positions that congressmen and women have put on, right? There's an actual ETF for it, compared to the market. If we take it with the Republicans now, we find out, they are literally 15% behind. Republicans are underperforming the market. You can say whatever you want about it. Maybe they're just not as shady as the Democrats. I don't know. Maybe they just spend a little less time looking at stocks that they're going to make rules on and stuff. But believe it or not, this is all 100% still legal. Occasionally we bring it up for argument, and somehow the bill just goes away. But Republicans lagging the stock market there by about 8%, and obviously Democrats outpacing since this started to become something that we track. So the Democrats have always outperformed. Do you think it's right that either of them should be able to do the things that they do? Yeah, it's a little frustrating. All right, I'll take your questions if you have any questions. Let me update you on earnings coming out tomorrow. We had Autozone today. That means Advanced Auto Parts is going to come out tomorrow. Advanced Auto Parts does not have the same track record in terms of stock performance. They tend to be weaker, actually, so something to look at there. And then it's kind of like retail world, right? With the exception of Baidu. So Baidu will report tomorrow, actually after hours, and then we'll find out tomorrow. But you got Dollar Tree, Office Depot. Do you? Hold on. It's retail season. I don't want to tell you the wrong thing. Someone will give me a hard time. Yeah. You got TJ Maxx, right? Salesforce.com is going to get all the attention after hours. And then you have Monster Energy Drinks. Jazz Pharmaceuticals is in there. Cool ticker. So obviously I like that one. Hewlett Packard and a few others. The worst one for tomorrow actually is Advanced Auto Parts. So 6 of the last 8 earnings reports, it's actually traded lower. And the best one, is there a bet? It's kind of a tie. Office Depot, 5 of the last 8 quarters, it has been positive. And then the same is true for Jazz Pharmaceuticals. So if you happen to own any of those, you've got a streak on your side, and hopefully that continues. We also got Fed president speaking tomorrow. Remember, tomorrow is the GDP number that comes out. What a coincidence that they happen to be speaking at the same time. Wouldn't this be a great time for them to give us a slight update on how they think things are going? You have 1, 2, 3, 4 Fed members speaking. And if you like it, Citigroup does they have a, what do you call this? Not a convention, but it's not like that big, but a conference. Hey, let's get together and talk about this stuff. But they have that for anything that's fintech, financial technology, right? So likely get some updates on that. Usually that coinciding with Salesforce has a little bit of action that may spill over. But Salesforce reports after hours. Anyways, I know I'm rambling, giving you all that stuff. Things that are just in my head. Yeah. I like it. Okay. Did I get you fired up about the politics? Yeah, there we go. Okay, good. I like it. Bought some Nike today, a Canadian utility. There you go. Question. Given the high valuation of tech and given sector rotation in a high inflationary environment, is VGTs run over? So that's awesome that you say it that way. This is not going to work. So VGT, you have a big focus on tech, and you can see it, right? I don't know if this is like a top or anything. I'm just like I like to look at that stuff and go, hey, why was there such a focus on these small caps lately? What's going on? Oh, hey, people don't want to pay a higher valuation. By the way, they will pay it if earnings, if we have like 7+% year over year earnings for the S&P this year, that makes it the S&P's valuation worth it, right? Having a 20x PE, yeah, all right, you know, that's still palatable in a way. I don't know that that's going to happen, but we'll see. How soon after rate cuts happen will mortgage rates be affected? Mortgage rates are not affected by the Fed cutting rates. It's helpful, but the bond market itself is how mortgage rates are determined. So, for example, let's go over here. I'll show you. We'll pull up the long bond, and we'll go to charts. So if you were to plot, and we could do this too. If it's boring tomorrow, we'll do this. Let's say from here to here, right, we have the price of bonds declining, interest rates going up. So if from the beginning of the year till now you were to plot the like a bank rate type interest rate, you would see that from the beginning of the year till now, interest rates have trended higher, right? Not by a lot. This is not a big move, but so it doesn't have to do with the Fed. It's just obviously helpful. It makes bonds less attractive. More attractive with lower rates. Kaylin says, what needs to happen this week for market to get a catalyst to move higher? Seems everyone wants a reason for a pullback, but it's not happening. Well, the GDP number, I think this week is the biggest number, biggest market moving number, right? The days all blend together here. So let me just do this with you. That's going to be our biggest market moving number, I believe. That's tomorrow. Yes. Everything else, and Thursday as well. Some manufacturing numbers, that can be a market movement. And then consumer sentiment stuff at the end of the week. But yes, the GDP numbers could be part of your catalyst if you're looking for something in the short term. I feel that if you're in office or Congress, you should only be allowed to invest in broad indices and not in individual companies. I think that's a reasonable request. You know what I mean? I think that's a reasonable. Or, you know how they were trying to do that government-wide IRA? Like, you would always have a retirement account and the government would just run it. That was, what, 3 years ago? Okay, if you could do that for 300+ million people, surely we could have a, sort of standalone thing, which, for the 535 of you, yeah, we're just going to handle it. You essentially get index funds. Insider trading. Come on. I love it. Good old world. What are the ETF based on Republicans, Democrats buying and selling called? So if you, I didn't come up with the name. The Democrat one is Nancy, N-A-N-C, and the Republican one is Cruz, K-R-U-Z. I don't know how they come up with those, I say sarcastically. Oh, thanks, MW. Yeah, he posted it in there for you. Yeah. He's waiting to buy an adult foster care home, like an 8-bedroom, thinking next summer. Oh, look up your zoning on that. I can maybe say that the same thoughts. I had a family member doing that. You got to look up your zoning rules there. Uh-huh. All right, I got you guys all fired up with your politics. You guys go do battle there. And I thought it was only fair. Hey, why did we only do Democrats yesterday? It's because they, they're the best at beating there. Just thought that was fun. All right, enjoy the rest of your day. Going to get on my way. Got to play catch up to all of you. I'm still playing catch up on. Apologies, I'm getting there. Trying to keep up with some of the things going on around here. We'll be back tomorrow. Going to do it all over again, and we'll have another lesson for you as well. Adios.